Good afternoon, everyone. Welcome to this special webinar, Having Trouble with Your Business Finances. I'm Peter Towers, Managing Director of ESS Small Business and ESS BIZTOOLS. I hope you're having a wonderful day, and thank you for joining us, where we look at some of the opportunities that are available for small businesses and medium-sized enterprises to look at how you might go about raising capital for a small business or a medium-sized enterprise. We have three choices for you today: Crowdsource Funding Equity Raising, Section 708 of the Corporations Act, and early stage innovation companies. So these are the three avenues that the federal government has built into the legislation. Section 708's been with us for 35 years. But crowdsource funding and early stage innovation companies both came out of the federal government's innovation statement that was announced in December 2015. Crowdsource funding equity raising, the legal requirements. Your company has to be an unlisted public company or proprietary company to utilize this means of raising capital. Your group turnover needs to be less than $25 million. And your group gross assets also has to be at less than $25 million. The company cannot be listed on a stock exchange anywhere in the world, and the company cannot be listed on an official list of a financial market. So they're the legal requirements. You then need to decide whether your company wishes to raise capital. You might be quite comfortable with how you're going at present. You might be able to raise loan funds from the bank, and you're quite happy with the concept of offering security or giving personal guarantees and monthly repayments. But if you want to expand your business, you might be looking for some more money. You want to purchase another business, where are you going to get the funds from? And you may have developed a new product, process, or service, thinking that you might be eligible for the early stage innovation company status, but now you've discovered that your expenditure in the last 12 months is over the cutoff figure for early stage innovation company expenditure of $1 million, or that the income in your company in the last 12 months has been over $200,000, which is another cutoff figure for early stage innovation companies. So on that basis, you would not be eligible as an early stage innovation company. So let's put all our attention back onto crowdsource funding equity raising, because you could potentially qualify as a crowdsource funding equity raising company to be able to raise capital to fund your business activities. And in this case, you could raise up to $5 million in a 12-month period. Now, some people get a bit scared of this concept of being able to raise $5 million. That's the maximum. You can raise any amount, virtually between $20,000 and $5 million. In fact, one company raised $55,000. So you don't have to raise anywhere near the $500,000 amount. You might be interested in getting details of the 55 companies that have already raised capital as crowdsource funding equity raising companies. So let's just have a look at what we've been able to do with some of the figures on crowdsource funding equity raising. What I've got on the screen now is the details of the industries that the companies that have raised capital utilizing crowdsource funding were from. We have ag tech, 2 companies, consumer FMCG consumers, tech food and beverage, and so the list goes on. So 54 companies are included in that list, and they're over the various categories, 36 categories. You can see that form in full detail by going to our website, www.essbiztools.com.au. So we'll just return to our material. So to get that material, as I said, you can log on to ESS Small Business. So the capital that's been raised so far is just under $40 million. In fact, it's $39.8 million. You can look at that in some detail. I'm just going to show you on our screen. So I'll just go back to that document so you can have a look at the information that pertains to the capital that has been raised. So the total amount is that 55 companies have raised $39.8 million. And what we have is the details of the individual companies, what's been completed, and details of the intermediaries, and first of all, the progressive capital raisings, and then the total that's been raised. Most of them have completed their capital raising that they are currently underway with. There is one in progress here with Equitise. So the companies are summarised. Birchall's completed 25 transactions for $16 million. Equitise has completed 13 companies for $10.38 million. So hopefully that gives you an idea of what has occurred, and you can then view, if you wish, the details of the individual capital raising that has been completed by these companies by clicking on their name, and the system will bring it up for you, and you can do all that on the www.esssmallbusiness.com.au website. So we'll now return to our PowerPoint slides, and so the capital raised so far, as I said, has been just under 40 million, 39.8 million, and you can view that on the screen. So why consider crowdsource funding equity raising? There's no loan, there's no personal guarantees. You don't have to offer any security. There's no monthly repayments. But you have to allocate ordinary shares in the company to the investors. That's the cost. It's a bit like making a cake. I've never actually made a cake, but my mother made quite a number when I was a young fellow, and obviously my wife's made some. And I've observed that there's a number of ingredients that go into making a cake, and I'm sure we all understand that. There's flour, there's sugar, there's milk, there's currants or sultanas or whatever else, maybe some flavoring, and it all has to be brought together. Now, if you miss out any one of those key ingredients, you haven't got a very nice cake. It doesn't rise, it's not very nice. The same thing applies in businesses. Businesses need a product or a service or whatever your business is all about, but you need people. You need people to be able to run the business. You need a leadership team. You need to develop strategies. You need to be able to implement or execute those strategies, and you need cash. You can have the first 4 of those items: people, leadership, strategies, execution, but unless you have got cash, it's very difficult to envisage how that business is going to operate. So the price for the cash is that you're going to allocate a percentage of your company, which would be based on calculations as on the value of the company to determine. It's worth thinking about. Can save you a lot of extra heartache. So Section 708 of the Corporations Act is the next one I want to move on to, because we've had this for 35 years and we've got proprietary companies, which is the only way you can utilize Section 708. There's no turnover limit. There's no gross asset limit, and the company cannot be listed on a stock exchange. The company can raise up to $2 million in a 12-month period from a maximum of 20 investors. So the limit is 20. So that's why Section 708 sometimes gets referred to the 2 million / 20 rule. You can raise 2 million from a maximum of 20 investors. There's no limit on the individual investment, subject to the maximum amount that is contributed is $2 million. So you could have one investor contribute $2 million. But you have to allocate ordinary shares in the company. Sorry. But you have to be beware of the 50 shareholder limit, because a private company can only have a total of 50 shareholders. So if you go to the market and raise $2 million from 20 investors and you already had 10 investors, you now got 30. And you've only got one more opportunity in the following 12 months to be able to raise a further $2 million if you need to, if you're going to have to go to 20 investors to get that. So you just need to be aware of that in the overall deliberations. The next area I want to move to is the early stage innovation company. This was the stablemate of crowdsourced funding equity raising, but the legislation got separated in Parliament, and early stage innovation companies was activated significantly earlier than crowdsourced funding equity raising. In fact, from July 2017, we've had early stage innovation companies. There's no intermediaries involved in this process, so it's fairly difficult to be able to track the number of companies who have been able to successfully utilize the early stage innovation company status to be able to raise capital. There's 3 tests. The first test looks at a proprietary company and says that the company has to be under 3 years of age and that the turnover has to be less than $200,000 and the expenditure has to be less than $1 million. So that's the first test. The company has to develop new products, processes or services or organizational or management methodology to be able to utilize this particular process. So if we've done all that, we're ready to move on. And we now go to what's called the gateway test. Now, the gateway test requires the business to have 100 points or to be able to earn 100 points. And points can be earned from things like research and development. If the company has spent between 15% and 50% of its expenditure on research and development, it earns 50 points. If the company has spent more than 50% of its expenditure on research and development, it earns 75 points. So they're well on the way to finding the 100 points. The company will also receive points if it's been admitted to the Accelerating Commercialization Grant. It will earn 75%. That's a great grant for someone who's developing new technologies, because the grant is up to $1 million on a 50% funding basis. Points can also be earned from companies who have patents. If you've got a patent anywhere in the world, you'll earn 50 points. If you've got plant breeders' rights anywhere in the world, you'll earn 50 points. If you've got innovation patents or registered designs, you'll earn 25 points. If you fear we've been invaded, don't worry. We live near or operate near a RAF base in North Queensland, and that's just our Defence Forces having some practice runs. That noise you can hear in the background. So if you earned 100 points, you are basically qualified as an early stage innovation company, and I'll show you the benefits of that shortly. But if you don't, you can then move on, and that enables you to move into the principles test. So all's not lost if you don't get the 100 points. So let's look at the principles test. You must be able to supply supporting statements to the 5 questions that I'm going to take you through now. Yes or no answers. If you give a no answer, well, you will not qualify in any case, but you need to supply more than just a yes. You need to be giving some supporting evidence to back up why you are positive about any of these questions. Is the company genuinely focused on developing for commercialization one or more new or significantly improved products, processes, or services? That is really what early stage innovation companies are all about. The test also asks questions about the high growth potential. Is there high growth potential for this business? Can the business be scaled up? Can it be made to be able to be taken to other markets? Has it got the potential to be able to apply beyond Sydney or beyond Melbourne? In other words, the whole of Australia or indeed the world? And does it have the potential to have a competitive advantage? And you've got to be able to supply supporting evidence as you answer those questions. Now, if you've satisfied the principles test, the company will then be very attractive to investors, because investors can then obtain some benefits, because the government specifically put this legislation in place to try to encourage investors to invest some of their money into new startup companies in Australia, companies that have developed new processes or products or services. The first benefit is a tax rebate of 20% of the investment, subject to a retail limit. The investment limit for a retail investor is $50,000. A retail investor is someone who has less than $2.5 million in assets, or less than a gross income for the last 2 years of over $250,000. And to claim that you are what would then become a sophisticated investor, you need a certificate from your accountant. So the benefit that a retail investor gets is 20% of their investment up to a maximum of $50,000, and that is $10,000. For a sophisticated investor, the maximum tax offset is $200,000, which has been calculated at 20% of a figure, say, of $1 million. A sophisticated investor can invest more than $1 million, but the cutoff for the tax rebate is $200,000. So that might make your company attractive to a potential investor. And there's also the potential capital gains tax exemption on the original shares that are held for more than 12 months and less than 10 years. And if the shares are held in that status, there is no capital gains tax payable. At the end of 10 years, if you still own the shares, the capital of the company has to be revalued, and that becomes your new cost price for capital gains tax purposes. There's no limit on the amount of capital that can be raised utilising this process. So let's look at business financing. It's difficult at present, isn't it? Banks are very difficult to deal with following the Banking Royal Commission, unless you fit exactly the guidelines that they're currently working to. The government has developed this legislation of Section 708. Admittedly, that's been there for 35 years, but the crowdsource funding, equity raising, and early stage innovation companies were only developed in the last couple of years. They've been put in place to help small businesses and medium-sized enterprises to have more opportunity to be able to obtain finance to assist you to run your business. And basically, this is the way public companies operate. You're becoming a de facto public company. And there's government grants that can also assist in the financing arrangements for businesses. If you want more information, you are most welcome to visit our website, www.esssmallbusiness.com.au, and click on to learn more on crowdsource funding, equity raising. If you need more information, you could talk to your accountant. But if your accountant's too busy doing tax returns and other things, or doesn't know enough about any of this, please contact us and we will send you details of accountants who are subscriber members of ESS BIZTOOLS all over Australia who can assist you to raise capital utilising this process. I hope that this overview helps you. If you have any other questions, please send me an email. And there's the telephone number and also the website addresses for our associated companies. So thank you very much for joining us today. I hope that you have gained something from getting an understanding of how the opportunities are now available to assist you to be able to raise capital for your companies. Have a great day. Goodbye.